Hey everyone, welcome back to your channel name. Today, we're diving into the Q4 FY25 results of IDFC First Bank to uncover what's driving this stock and whether it's a buy, hold, or sell. If you're into stock analysis or banking sector insights, hit that subscribe button and let's get started. First, a quick recap. IDFC First Bank, formed in 2018 from the merger of IDFC Bank and Capital First, is a private sector bank focusing on retail banking, digital solutions, and small businesses. With a market cap of around Rs 49,023 crore as of March 2025, it's a mid-sized player in India's banking space. But how did it perform in Q4 FY25? Let's break it down. The Q4 results announced on April 26, 2025, showed mixed performance. Here are the headlines. Net profit. The bank reported a standalone net profit of Rs 304.1 crore, down a steep 58% year-on-year from Rs 724.3 crore in Q4 FY24. This was below analyst expectations of Rs 359.6 crore, largely due to challenges in the microfinance sector. Net interest income, NI grew 9.8% to Rs 4,907 crore from Rs 4,469 crore, but it missed estimates of Rs 5,080 crore. This shows the bank is still earning decent interest, but growth is slower than expected. Net interest margin, NIM dipped to 5.95% from 6.04% quarter-on-quarter, impacted by the struggling microfinance portfolio. Asset quality. Gross NPA improved slightly to 1.87% from 1.94% QoQ, and net NPA was stable at 0.53%. However, microfinance slippages rose to Rs 572 crore from Rs 437 crore, signaling stress in this segment. Balance sheet growth. The bank's balance sheet grew 16% YoY, with customer deposits up 25% and loans and advances up 20.4%. The CASA ratio remains strong at 46.9%, reflecting a solid deposit base. In the Q4 FY25 earnings call, CEO V. Vaidyanathan highlighted both strengths and challenges. The bank's retail and deposit growth is a bright spot, with customer deposits surging 25% YoY. They're also raising Rs 7,500 crore through a CCPS capital raise, which will boost the capital adequacy ratio to support future growth. However, the microfinance portfolio, which shrank to 4% of the loan book from 6.6% last year, continues to drag performance. Elevated slippages and credit costs here led to the profit drop. Management is optimistic though, projecting loan and deposit growth and cost-cutting to improve profitability by FY26. They also proposed a Rs 0.25 per share dividend, which some analysts criticized given the profit decline. Let's analyze IDFC First Bank's fundamentals. The stock's price-to-earnings ratio is high at 32.19, compared to peers like Federal Bank or IndusInd Bank, suggesting it's priced for growth. The price-to-book ratio of 1.47 is reasonable for a growing bank. Return on equity, or ROE, is low at 7.88% over 3 years, reflecting moderate efficiency. The bank's focus on reinvesting earnings over dividends with a 0% yield prioritizes growth but may disappoint income investors. High debt of 51,506 crore rupees and a low interest coverage ratio raise concerns about leverage. Contingent liabilities of 5,986 crore rupees are another red flag. Microfinance issues could persist if economic conditions worsen. On the strength side, strong deposit growth, a high CASA ratio, and a focus on digital banking position IDFC First Bank well in the competitive private banking sector. The capital raise and Warburg Pincus's interest in a 9.99% stake signal investor confidence. Analysts are mixed. The median 12-month target price is 69 rupees and 76 paise, a modest 2.5% upside from the current 68 rupees and 3 paise as of May 2, 2025. ICICI Securities recommends a buy with a 75 rupee target, while Centrum Broking downgraded to 59 rupees, citing return on equity and cost concerns. The stock has risen 235% since May 2020, but trades 33% below its all-time high. Recent volatility reflects profit disappointment, but deposit growth and capital infusion could drive recovery. So is IDFC First Bank a good investment? If you're a long-term investor, the bank's growth in retail banking, strong deposit franchise, and digital push are compelling. However, the microfinance stress, high leverage, and elevated price-to-earnings ratio suggest caution. Short-term traders might wait for a dip, given the stock's uptrend but high valuation. My take? It's a hold for now. If the bank resolves microfinance issues and improves return on equity in fiscal year 2026, it could be a solid buy. This is not a buy or sell recommendation. Always do your own research and consult a financial advisor. That's my take on IDFC First Bank's fourth quarter fiscal year 2025 results. What do you think about this stock? Drop your thoughts in the comments and don't forget to like, subscribe, and hit the bell for more stock analysis. See you in the next video. Scene 2. End screen time code 000530005350. Visual outro music, channel logo.